Welcome to our deep dive into the strategic world of options trading. Our listener has given us Options as a Strategic Investment by Lawrence G. McMillan, and wow, it's a lot.
It's definitely a dense read.
Yeah, but that's what deep dives are for, right? To unpack these complex ideas.
Exactly. And this book is packed with them. McMillan wants to show us how to use options strategically, not just gamble on them.
Right, not like throwing darts at a board.
Exactly. He's all about thoughtful investing with options as a real tool.
So to start, he lays out the fundamentals, right? Like what even are calls and puts?
Yeah, the ABCs of options. Think of them like contracts, giving you the right, but not the obligation to buy or sell some stock.
Okay, so I'm not forced to do anything, just have the option.
Right, exactly. And there's a set price, called the striking price, and a deadline, the expiration date.
Makes sense. So calls are for buying, puts are for selling.
You got it. Now, the tricky part is what makes these things valuable. What am I getting when I buy an option?
Yeah, good question. It's not like owning a share of stock.
Right, it's more abstract. An option's got two parts to its value, intrinsic and time value.
Okay, break that down for me.
Intrinsic is straightforward, the difference between the stock's price right now and the option's striking price. So, stock at $60, you have a call option to buy at $50, intrinsic value is $10.
Oh, so it's like a $10 profit already locked in.
Kinda, but that's only if you exercise the option right now. There's also time value, the extra you pay for the chance the stock will move even more in your favor before the option expires.
The longer I have, the more chance for the stock to go up. I get it.
Exactly. Further out expiration date means more time value, more time for things to change. That's why McMillan talks about options behaving like a curve, you know?
Oh, yeah, I was wondering about that. Stock price on one side, time on the other, and the options value like bending between them.
That's a perfect visualization. And understanding that curve is key to understanding the risk and the reward. Stock moves your way, the curve bends up, options worth more. But if time runs out and the stock's flat, or worse, the curve flattens, you lose that time premium you paid.
Starting to see why choosing the right option strategy is so important. And McMillan talks about suitability a lot. What does he mean by that?
Suitability is all about, well, making sure the strategy suits the investor.
Huh, that makes sense.
Not all options are right for everyone, just like not every stock is a good fit. Got to match the strategy to your goals and how much risk you're comfortable with.
So are there option strategies that are like safer than others? I know he spends a lot of time on covered writing.
Oh yeah, covered writing is generally considered less risky than straight up buying options, for example. It's when you own stock shares, but also sell call options on those shares.
Okay, so you're betting the stock won't go up too much.
It's more like you're generating income by selling someone else the right to buy your shares at a set price.
Mm-hmm.
If the stock stays below that price, you keep the premium you got for selling the option.
Almost like renting out my stock. But what if the stock does go way up?
That's the trade-off, right? If it goes above the strike price, they'll likely buy your shares, and you might miss out on bigger gains.
So you're basically capping your potential upside, but protecting yourself a bit on the downside.
Exactly. And McMillan has this great example in the book, Table 2.3. He shows how even if the stock moves against you a little, you can still come out ahead.
That's reassuring. But I guess even a relatively safe strategy like covered writing needs active management, right?
Yes, absolutely. Things change, the market moves, you have to adjust. That's where rolling options comes in.
Rolling options. Sounds interesting. What's that all about?
So say the stock price is dropping, your covered write's looking shaky. You buy back that call option you sold, then sell a new one with a lower strike price.
So you're giving yourself more time to recover, kind of moving the goalposts.
Exactly. And McMillan dives into a bunch of other strategies beyond covered writing, too. He talks about ratio writing, bull and bear spreads, straddles, collars. There's a whole world of option strategies to explore.
Wow, it's starting to feel like options are this whole other language of the market, and we're just learning the alphabet.
That's a great way to put it. But McMillan gives you a solid foundation, explains the mechanics of these strategies, and, crucially, how they connect to your real-world investment goals.
And that's what makes it more than just gambling, right? This is about using these tools strategically.
That's exactly it. Now, speaking of managing risk, there's this key concept we should touch on: delta neutral trading.
Oh, delta neutral trading sounds almost like magic. What is that?
Well, not magic exactly, but it is powerful. It's all about understanding delta, which is a measure of how much an option's price is expected to change for every dollar the stock moves.
So if a stock goes up $1 and an option has a delta of 0.5, the option price is expected to go up 50 cents.
You got it. And delta neutral trading is all about combining options so that their deltas cancel each other out. Theoretically, you've got a position that's not affected by the stock price swings.
Okay, I'm starting to get it. But McMillan also says true delta neutrality is almost impossible to achieve. Why is that?
It's kind of like, steering a ship. You can't keep it perfectly still in rough seas, right?
Right, always getting tossed around.
But you can adjust the rudder to keep on course. Delta neutral trading is about making those little adjustments, managing your risk.
Okay, so even if you can't completely eliminate risk, you can at least try to control it.
Exactly. And that brings us to another really important concept McMillan discusses: implied volatility.
Implied volatility. That always sounded so mysterious to me.
It can be a bit tricky to wrap your head around. But think of it like this. It's the market's expectation of how wildly a stock price might swing in the future.
So like a fear gauge for that specific stock?
That's a great way to put it. And the interesting thing is implied volatility gets baked right into option prices.
So a stock with high implied volatility, its options will be more expensive.
Precisely. Even if the stock price itself hasn't really moved.
So if you can, sense when the market is overreacting, you could potentially buy options that are underpriced or sell ones that are overpriced.
You got it. And McMillan has some really great tips on how to analyze implied volatility and use it to your advantage.
I bet there are some strategies that do better when volatility is high and others when it's low, huh?
Absolutely. Knowing which strategy to use for the current volatility environment can be a huge advantage.
McMillan really seems to emphasize that successful options trading isn't all just about math.
Right. You can't just plug numbers into a formula.
You need to actually understand the company, the industry, what's driving the market.
Exactly. You have to think like a detective looking for clues to see if the options are telling the whole story or if there's something else going on.
So you're saying options trading is more than just speculation?
Definitely. It takes research analysis and a good understanding of the bigger picture.
This has been so eye-opening. I'm actually starting to get excited about options. Before this deep dive, I felt a bit intimidated by them, to be honest.
That's great to hear. And McMillan's book is a great resource to keep learning from. He explains not just the what, but also the why behind everything.
I was surprised how engaging it was for such a technical subject. I especially liked his emphasis on the strategic side of things.
Yeah. Right. It's not about getting rich quick. It's about understanding how options can help you reach your investment goals, whatever those might be.
It's like having a whole set of specialized tools in your toolkit.
Exactly. But like with any tool, you need to know how to use them. That's why McMillan talks about education, risk management, and always continuing to learn.
Speaking of the practical side of things, he mentions options contracts are standardized. What does that mean?
It means that contracts for a specific stock has set expiration dates and strike prices.
So you can't just create your own contract with, whatever terms you want?
Not really. There are some customizable options, but usually you'll be trading standardized contracts.
What about when an option is exercised? I'm still a bit fuzzy on how that works.
Oh, it's pretty simple. If you bought a call option and the stock goes above the strike price, you can exercise your right to buy the stock at that lower price, and the seller has to sell it to you, even if they don't want to.
So if I sell a call option and the buyer exercises it, I have to sell them my shares, even if the stock is way up.
That's the risk you take when selling options. You can be forced to sell for less than the market value. But if you buy a call and the price goes down, you can just let it expire and you only lose the premium.
Okay, I see the trade-offs there. So it sounds like there's a lot of responsibility involved, both for buyers and sellers. This isn't something to jump into lightly.
Definitely not better.
Yeah.
McMillan is very clear about that options trading isn't for everyone. It takes knowledge, experience, and a willingness to manage risk.
It's definitely been a lot to take in, but I feel like I'm finally understanding the potential of options. It's not just about making risky bets, it's about having a strategy.
Exactly. McMillan has done a great job laying the groundwork for us. But this is just the beginning. There's so many more advanced concepts to explore.
McMillan mentioned some really interesting things about using options to arbitrage price differences in different markets, right?
He does, and it's fascinating stuff. It really highlights just how deep and complex the options market can be.
That sounds way too complicated for me right now. But it's cool to know those opportunities are out there.
Even if you're not planning on becoming a professional arbitrager, understanding these concepts can give you a much better understanding of how markets work in general.
This deep dive has really been a game changer for me. I'm excited to learn more about options now.
That's fantastic. And remember, McMillan's book is there to guide you. He doesn't just throw out complex terms and strategies. He explains the logic and the reasoning behind them.
And he ties it all back to real-world applications, which is what makes it so valuable.
Exactly. Whether you want to boost returns, protect your portfolio, or generate some extra income, there's an options strategy out there for you.
So what advice would you give to someone who is feeling a bit overwhelmed by the world of options?
I'd say start with the basics. Make sure you really understand calls, puts, intrinsic value, time value. And as you get more comfortable, you can start exploring different strategies and see how they fit with your investment goals.
And don't be afraid to ask questions. There are so many resources out there, including McMillan's book, that can help you make sense of it all.
It really does feel like learning a whole new language, doesn't it?
It does, but once you know the language, I bet you start to see opportunities that most people just miss.
Oh, absolutely. Like those arbitrage opportunities we were talking about.
Yeah, they sound incredibly complex.
They can be, yeah. But the basic idea is to find situations where the same asset is priced differently in different markets.
So, like, if an option is priced higher on one exchange than another.
Exactly. Or even between the options market and the regular stock market.
So you're basically buying low and selling high, but with options instead of stocks.
That's a great way to put it. But it requires a deep understanding of those pricing models. And you have to be really quick to execute those trades before the opportunity disappears.
Okay, that's definitely way above my pay grade. But it's fascinating to know it's even possible.
It really shows how much depth there is to the options market. And even if you don't plan on becoming a professional arbitrager, just understanding these concepts can give you a whole new perspective on how markets work.
This deep dive has really changed how I think about options. I went from feeling kind of intimidated by them to actually being excited to learn more.
That's fantastic. And McMillan's book is a great place to continue your journey. He does a great job of explaining not just what things are, but why they work the way they do.
Yeah, he really connects the theory to the real-world applications.
Exactly. And he does it in a way that's surprisingly engaging, especially for such a technical topic.
I especially liked how he kept emphasizing the strategic side of options trading. It's not about gambling or chasing quick profits.
Right. It's about having a plan and knowing how options can help you achieve your specific goals.
Whether that's generating income, protecting your portfolio, or whatever.
Exactly. It's like having a whole toolbox full of different tools.
And as you said earlier, you have to know which tool to use for the job.
Couldn't have said it better myself. McMillan really drives home the importance of education, risk management, and always being willing to learn new things.
Well said. So to wrap things up, any final words of wisdom for our listeners who might be feeling a little overwhelmed by the world of options?
I'd say don't be afraid to start with the basics. Get a good grasp on those fundamental concepts like calls, puts, intrinsic value, and time value.
Right. Get those building blocks in place.
Exactly. And as you get more comfortable, you can start branching out and exploring different strategies. See what works for you, what fits your goals, and risk tolerance.
And remember, there are so many resources out there to help you along the way. McMillan's book is a great one, but there are plenty of others too.
Don't be afraid to ask questions and keep learning. The world of options is vast, but it's incredibly rewarding once you start to understand it.
Well, I think we've successfully unpacked options as a strategic investment. Thanks so much for joining us for this deep dive.
It was my pleasure. And to all our listeners out there, happy investing.
Remember, knowledge is power, especially in the world of finance. Until next time.